It really hits you when you hear that an estimated 4 million Bitcoin, I mean, that's like a fifth of all that's ever been mined, are just, well, gone.
Yeah, lost forever. Lost keys, forgotten passwords, old hard drives.
It just makes you think about digital scarcity in a completely different way, doesn't it?
Mm-hmm.
And here's another thing. By the end of last year, the total amount of Bitcoin held by institutions actually went past the amount believed to be held by Satoshi Nakamoto.
Right, the mysterious creator.
Exactly. Okay, so let's try and unpack what that kind of shift really means.
What's fascinating there isn't just the sheer size of those numbers, but what they imply,
Yeah.
for an asset that was born completely outside the traditional finance world. To now have institutional ownership bigger than its founder's stash, that says a lot about its journey, its move towards maybe mainstream acceptance. It really makes you ask, okay, what does this concentration of Bitcoin in these big institutional hands mean for its future, for like price stability, market dynamics?
Exactly. And that really gets to the core of what Bitcoin is, doesn't it?
It does.
If you strip it all down, it's basically a decentralized digital currency running on a blockchain.
Uh-huh.
And this blockchain, you can think of it as a shared ledger, right?
Yeah.
Constantly updated, supposedly tamper-proof,
Mm.
a digital record of all the transactions,
And crucially independent.
totally independent of traditional banks, governments. It's just a fundamental break from how money has always worked.
Precisely. That independence is, well, it's the core idea. It's a tech innovation, sure, but it's also kind of philosophical. It challenges all those established ideas about financial control, accessibility.
Right. So for this deep dive, our mission is really to dig into Bitcoin. We're drawing on quite a mix of sources here to give you a really well-rounded picture, the tech, the value, where it might be going.
Yeah, we've looked at news reports, expert analysis, some key historical stuff, too.
We want to try and move past the sort of surface level stuff,
Right. Explore the why. Why was it designed this way? Why is it becoming more significant now in the global economy?
Yeah.
We want to connect those dots for you.
Okay, let's start right at the beginning then.
Yeah.
The foundational principles. And the
Yeah.
big one, the one everyone always talks about, is decentralization.
Yeah, decentralization isn't just like a feature, it's the whole point.
Wow.
It's why Bitcoin exists like this.
Mm-hmm.
Unlike traditional finance, where power is all bunched up with central banks and big institutions, Bitcoin spreads that control out across a whole network of users.
Mm-hmm.
And that distributed setup, that's key. It makes it resistant to censorship, resistant to single points of failure.
And it's almost like ironic how the anonymity of Satoshi Nakamoto, the creator, actually reinforces this.
It really does.
Their choice to stay unknown.
Yeah.
Maybe it wasn't even planned for decentralization, but it definitely helped, right?
Absolutely. The mystery around Satoshi meant there wasn't one central figurehead who could just dictate where Bitcoin went.
Right. No CEO of
Yeah.
Bitcoin.
Exactly. So the network had to evolve through community consensus. It kind of forced that decentralized way of thinking. It's a fascinating, unintended consequence.
It really is. The whole origin story is tied up with this idea of being outside central control. And speaking of origins, the Bitcoin white paper itself, the blueprint document, it's actually in the blockchain, isn't it?
That's right, yeah. Someone cleverly embedded the entire white paper as metadata in a transaction way back in 2013.
Wow.
And the thing is, because the blockchain is immutable, that foundational document is just there forever, accessible to anyone on the network, a permanent link right back to Bitcoin's beginnings.
Okay, so we're getting these core ideas, decentralized, the origin story. Now, how does that actually translate into moving Bitcoin around? How does the transaction work, basically? For me to you, say.
Okay, so at its heart, a Bitcoin transaction is just a digitally signed record. It shows value moving from one Bitcoin address to another on the blockchain.
And these addresses are linked to public keys.
Exactly. The addresses represent public keys. You can think of your public key like an email address for getting Bitcoin, something you can share.
And we use Bitcoin wallets to handle all this, right? Software, hardware.
Precisely. Your wallet manages your keys. The public key is for sharing, for receiving, but the private key, that's the crucial one.
That's the secret sauce.
Yeah, it's like the secret code that lets you actually spend the Bitcoin linked to your public key. You absolutely have to keep that private and safe.
Okay, so walk me through it. Simple transaction. I want to send you, say, a tiny bit of Bitcoin. What happens under the hood?
Right. Let's say Alice wants to send 0.05 Bitcoin to Bob. Alice uses her private key to create a digital signature. This signature is attached to a message.
And the message says?
It specifies the input, that's where her funds are coming from, her address, the output, which is Bob's address, and the amount, 0.05 BTC. Then This whole signed package, the transaction, gets broadcast out to the Bitcoin network.
Okay, so it goes out there, and then it just kind of waits.
It enters what's called the mempool. Think of it like a waiting room for unconfirmed transactions.
Right.
From there, it needs to get picked up by miners. Now, miners are people or companies running powerful computers.
The ones doing the heavy lifting.
Exactly. They verify these waiting transactions, bundle them into blocks, and then they compete. They race to solve a really complex math puzzle. That whole process is called proof of work.
Uh-huh.
The first miner to solve it gets to add their block of verified transactions to the official blockchain. And that's what secures the network, makes sure the history can't be changed.
And that's where the Coinbase transaction fits in. It's always the first one in a new block.
Precisely. The very first transaction in every new block is this special Coinbase transaction. It's different because it doesn't have an input of existing Bitcoin.
Oh, okay.
Instead, it's how new Bitcoin gets created. It's the reward given to the miner who successfully added that block.
Plus the fees from the other transactions in the block.
Exactly, plus the fees. Right now, after the 2024 halving, that block reward, the subsidy, is 6.25 BTC. It's fundamental to how Bitcoin works. And, fun fact, that's where the name of the big exchange, Coinbase, comes from.
Interesting. So these miners are crucial. Verifying, adding to the record, getting paid in new Bitcoin and fees. Let's talk about those fees. How do they work?
Well, transaction fees are basically a way to get your transaction prioritized. See, each block on the blockchain has a size limit, about 1 megabyte.
Okay, limited space.
Right, so there's only so much room for transactions in each block. When the network gets busy, lots of people trying to transact, miners will naturally pick the transactions that offer them a higher fee.
So if I want my transaction to go through faster when it's busy,
you include a higher fee. It bumps you up the queue, makes it more likely a miner will include your transaction in the very next block they mine. Think of it like paying for express shipping.
Makes sense. Like digital rush hour pricing.
Yeah.
Okay, let's shift gears a bit. Let's talk about something absolutely fundamental to Bitcoin's value, or at least the perception of it. Scarcity.
Absolutely. This is key. The Bitcoin protocol itself has a hard-coded limit. There will only ever be 21 million Bitcoins created. Full stop.
Never more than 21 million.
Never. And that finite supply is, well, it's a cornerstone of its value proposition. That's why people compare it to things like gold, other scarce assets.
And that fixed limit makes it potentially deflationary, right? Unlike regular currencies that can be printed more and more, a hedge against inflation. And we're actually pretty far along in mining it all already.
We are. As of now, 2025, over 95% of all the Bitcoin that will ever exist has already been mined.
Wow, 95%.
Yeah, so there's less than about 1.1 million coins left to come into circulation over many, many years. This built-in scarcity is a huge driver of that digital gold narrative. It attracts investors looking for something that can hold value and isn't subject to, central bank inflation policies.
It's also just mind-boggling to think about how many Bitcoins are thought to be lost forever. You mentioned around 4 million earlier.
Yeah, the estimates are around that figure. A really substantial chunk. Lost private keys, broken hard drives thrown away back when Bitcoin wasn't worth much.
Like early days mistakes.
Exactly. That famous story of James Howells, the guy who accidentally threw out a hard drive with thousands of Bitcoin on it.
Oh, man.
It just highlights how final losing those keys is. And this permanent loss effectively reduces the circulating supply even further. It makes the remaining Bitcoin even scarcer, potentially adding to that scarcity premium. It's a weirdly fascinating aspect of a digital asset verifiable permanent loss.
And then there's the other big chunk, Satoshi's stash. Around 1.1 million Bitcoin that have just never moved.
Yeah.
What does that tell us?
Well, those coins are sitting there untouched in various early wallets, worth an absolute fortune now, obviously.
Yeah.
The fact that they've stayed dormant for, over 15 years now, it kind of reinforces Bitcoin's decentralized nature. It's like the creator just set it up and walked away.
Let the network run itself.
Exactly. It adds to the mystique, sure, but it also backs up that narrative of a truly independent digital currency, not controlled by its founder.
So you've got this built-in scarcity, the hard cap.
Yeah.
You've got millions lost forever. You've got the founder's stash untouched. The case for Bitcoin as a store of value, this digital gold, seems pretty strong based on that. Are there other characteristics supporting that idea?
Definitely. Beyond scarcity, its decentralization is key. Resistance to censorship, government control. That makes it potentially attractive, especially in uncertain economic times.
Right.
Its digital nature means it's durable. You can't physically destroy it like, say, gold bars. And yeah, it's been volatile. Everyone knows that.
Hugely volatile at times.
But if you look at its long-term price performance, it's been pretty significant. And compared to many other cryptocurrencies, it's actually shown increasing stability over time. All these things together bolster that digital gold argument.
What about its original idea, though? Using it as, electronic cash,
Yeah.
medium of exchange for everyday stuff. Is that still practical?
It's a mixed picture. Using the main Bitcoin network, the base layer, for small, frequent payments, it can be slow, and the fees can add up, especially when the network's congested.
Yeah, not ideal for buying coffee.
Probably not on the base layer, no.
Yep, okay.
That's where things like the Lightning Network come in. These are layer 2 solutions built on top of Bitcoin.
Okay.
And they're specifically designed for faster, much cheaper transactions, even tiny microtransactions. So the infrastructure for using Bitcoin as a medium of exchange is definitely evolving, even if it's not quite mainstream for daily buys yet.
It definitely feels like things are evolving fast.
Right.
Because when you look at Bitcoin out in the real world today, wow, we're seeing huge shifts, especially with big institutions getting involved.
Yeah, this is where it gets really interesting lately. Remember, we said institutional holdings surpassed Satoshi's estimated stash by the end of 2024. That was largely driven by these new spot Bitcoin ETFs. And it's a monumental development. It signals a major shift in how traditional finance sees and interacts with Bitcoin. It does make you wonder, though, what does that concentration of ownership mean long-term for market power?
We're talking about huge names, right? BlackRock, Fidelity, launching these ETFs and just seeing massive amounts of money pour in. I read BlackRock's IBIT was the fastest growing ETF in history.
It is incredible. The demand was, frankly, extraordinary. And this institutional hug basically is directly feeding into price predictions now.
Like the Bernstein analysts.
Exactly. Bernstein analysts, for instance, bumped their Bitcoin price target way up to $200,000 by the end of 2025. And a big reason they cited was exactly this: the success of the current ETFs and the expectation that more big players will get regulatory approval for similar products. Now, this level of institutional money could lead to more price stability eventually, but, volatility is still part of the game for now.
It really feels like a turning point. And it's not just about investing, is it? There's also more talk about countries potentially holding Bitcoin in their national reserves.
Yes, that idea is definitely gaining some traction, at least in discussions. You hear about it in the U.S., in Switzerland, a few other places, people exploring whether nations should allocate some reserves to Bitcoin.
Why would they do that?
Well, the arguments usually center on its fixed supply, its independence from other national currencies and financial systems, seeing it as a potential diversification tool, maybe a hedge if confidence in traditional reserve currencies wavers.
Fascinating idea. And for a totally different angle on Bitcoin's usefulness, we can look at places facing real economic hardship, like Venezuela.
Venezuela is a really compelling case study. You've got hyperinflation, massive economic instability. And for many Venezuelans, Bitcoin has become a more reliable way to store value than their own currency. They're using it for remittances, sending money across borders, getting around capital controls, even for starting small businesses, or just getting access to financial tools if they're shut out of traditional banking.
So it's providing real utility there.
It is. Now, there are still big challenges, regulations, internet access, infrastructure limits, but Bitcoin has shown it can be surprisingly resilient, a potential stabilizing force even in really tough economic conditions.
It really highlights what a decentralized currency can do in extreme situations. Okay, shifting gears completely, I read something kind of wild. Apparently, a Bitcoin transaction was sent from the stratosphere once, like near space.
Yeah, that's right. Back in 2016, I think. A crypto mining company did it.
Oh.
It was more symbolic than anything, really. Just demonstrating that Bitcoin can operate outside traditional internet infrastructure, that it's borderless, digital, distributed. Kind of cool, though.
From the stratosphere. You don't hear that about the dollar. And through all this, the ups and downs, the weird experiments, the actual Bitcoin network itself has just kept running, hasn't it? Like clockwork.
Incredibly so. As of 2025, we're talking over 16 years of continuous operation, no major network downtime.
That's amazing for any complex system.
It really is. It speaks volumes about the strength of its decentralized design, run by this global network of nodes and miners. It's just proven remarkably robust against all sorts of potential problems.
Okay, so looking ahead then, the big question everyone always asks, what's the future look like?
Yeah.
And what are the experts saying about price? The prediction game.
Ah, yes, the crystal ball gazing. Obviously, predictions are just that, predictions, highly speculative. But there are factors people look at.
Like the halvings.
Exactly. The Bitcoin halving events, where the reward for miners gets cut in half, happen roughly every 4 years. Historically, these have often been followed by price increases, mainly because the rate of new Bitcoin entering the supply slows down. The last one was April 2024.
So supply gets tighter. And what are some of the actual price targets being thrown around now? I know they vary wildly.
They really do. Let's see. Peter Brandt revised his target, looking at maybe $120,000 to $200,000 by September 2025. Fidelity's Jurien Timmer takes a super long view, suggesting maybe $1 million per coin way out in like 2038, 2040.
Wow.
Chamath Palihapitiya mentioned $500 by late 2025, maybe $1 million by the 2040s. Max Kaiser is always famously bullish, $200 by end of 2024, aiming for $1 million eventually. And as we said, Bernstein's looking at $200 by the end of 25.
That is a huge spread. What's driving these different numbers? What are the key factors?
Well, a few main things. Basic economics, supply and demand. That's huge. The fixed supply meeting potentially growing demand, especially from these institutions via ETFs.
Okay.
Then there's market sentiment, just how people feel about Bitcoin, investor psychology, that plays a big role. Technological developments within Bitcoin, even if they're slow and careful, matter. And of course, the global regulatory picture is always a factor.
And bigger economic trends too, I guess.
Absolutely. Things like inflation rates, how other assets are doing, it all feeds into the mix.
You mentioned tech developments beyond Lightning. What else is cooking in the Bitcoin world? Is much changing on the core level?
The Bitcoin developer community is always exploring, but yeah, the approach is very cautious. Stability and security are paramount.
Right. Don't break the core protocol.
Exactly. But there are proposals. BIP 324 aims to encrypt the communication between nodes, which boosts privacy. BIP 118, or Secaution Any Prevout, could really improve how Layer 2 solutions like Lightning work, make them more powerful and flexible.
Okay.
And then there are ideas like OPCAT or OPCTV, which are about adding more programmability to Bitcoin itself, potentially enabling more complex smart contracts or specialized transaction types like secure vaults directly on Bitcoin. But again, these things need massive consensus and tons of testing. It's a slow, careful process.
And the regulatory side seems like it's still being figured out everywhere.
It really is. You've got different approaches all over. The EU has its MiCA regulations coming online. The US approved the spot ETFs, but the broader framework is still developing. Other countries are all at different stages. Getting consistent global rules for something inherently borderless and decentralized like Bitcoin, that's a massive challenge.
Okay, final big comparison then. We focused on Bitcoin, but there are thousands of other cryptocurrencies out there, altcoins. How does Bitcoin really stack up against them? What makes it different?
That's a really important question. I think a key difference, maybe the key difference, is Bitcoin's level of decentralization.
Still number one on that front.
Arguably, yes. Largely thanks to its proof-of-work system, many altcoins, especially proof-of-stake ones, can have elements that are more centralized, whether it's in who validates transactions or who controls development or initial coin distribution. Then there are basic tech differences, too. Mining versus staking for creating new coins. Transaction speeds, different security models. Bitcoin has consistently prioritized security and decentralization, sometimes at the expense of speed or features.
And the economics are fundamentally different, too, with that fixed supply.
Absolutely. That 21 million hard cap is a huge economic differentiator compared to many altcoins that might have inflationary models or no cap at all. Bitcoin also just has that first mover advantage, right? The biggest network, the most global adoption, the brand recognition, now amplified by these huge spot ETFs.
This carved out its niche.
It really has. While other platforms like Ethereum focus on broad smart contract functionality, Bitcoin's primary role, its main narrative now, is increasingly solidifying as digital gold, a secure, scarce, decentralized store of value.
Okay, so wrapping up this deep dive, a few things really jump out at me. The fact that the original white paper is literally embedded in the blockchain. That's kind of profound.
It is pretty cool.
The sheer amount of lost Bitcoin, millions of coins gone forever, having a real impact on scarcity. That's wild. And this recent surge in institutional buying, actually overtaking Satoshi's estimated holdings. That feels like a really major turning point for its legitimacy and its place in finance.
Yeah, those developments definitely have potentially big implications for where things go next, for price stability, market dynamics.
We really aimed, with this deep dive, to give you a solid, but hopefully accessible, understanding of Bitcoin, looking at the basics, how it works, how it's being used, and what people are thinking about its future without getting lost in the weeds.
Yeah, hoping you picked up some useful insights, maybe had a few aha moments along the way.
And maybe just one final thought to leave you with. With all this institutional money flowing in and these serious talks about adding Bitcoin to national reserves, is Bitcoin maybe heading towards being something more than just digital gold? Could its role in the whole global financial system be on the brink of changing in a really fundamental way?
It's definitely a critical question to ponder. Given that fixed supply in a world where fiat currencies can inflate, how will Bitcoin's role evolve over the next decade or two as a store of value, maybe even a reserve asset? Something to keep thinking about with everything we've discussed today.